With just a few days to go for the budget, there is a growing debate on the India growth story. Indian stocks were a hot bet among international fund managers up until a few months ago, but with benchmark indices hitting record highs repeatedly. However, that mood has now dwindled since late September. At one point, Indian stocks were considered a serious contender to China in the emerging market indices. Such ambitions are now dwindling as the market is shaken by a slowing economy and foreign outflow. The rupee's value has dropped to new lows versus the dollar, and economic growth has slowed to a 4-year low. Since the end of September, foreign funds have sold shares worth over $19 billion in the Nifty benchmark, which is poised for its worst monthly losing streak since 2001. Bloomberg Economics predicts that India's GDP growth in the March quarter might be cut by as much as 50 basis points due to the market sell-off. As a result of this, household spending could be further dampened by the wealth depreciation that follows. And this means the government is under even more pressure to turn things around before presenting the budget on the 1st of Feb. Chetan Seth, an Asia-Pacific equity strategist at Nomura Holdings, said the unbridled enthusiasm in India has faded a bit. He added there are clearly more investors now who are asking difficult questions, and there is a healthy debate as opposed to no debate earlier on the India story. The stock market and corporate profits in India were both bolstered by the government's strong emphasis on infrastructure development and the consumer boom post the pandemic. As a result, the country was a favorite among global equities investors. The total value of firms included in the MSCI India Index reached a record high, increasing by about $2 trillion in just over 2 years. Just then, the growth story began to show signs of cracks. High inflation dampened demand in metropolitan areas, in addition to discouraging the central bank from lowering rates. Investors started to doubt if Indian stocks were worth the premium they were trading at as corporate earnings started to decline. All right, to discuss more on this, I'm being joined by Mr. Ajay Bagga. He is a market expert, live joining me from Mumbai. Welcome to World Business Watch, Mr. Bagga. Always a pleasure speaking with you. As far as the upcoming budget, what's your outlook on the upcoming budget? What major announcements should one expect?
Yeah, as you said in the earlier segment, there is a slowdown in the economy. There is a slowdown in corporate earnings. The valuations for the Indian markets are higher than normal. So with respect to other emerging markets and developed markets, our valuations are much higher, even higher than what we normally are. We are normally about 30-35% higher. Now we are running at about 60% higher in terms of price earning ratios. So there is a bit of concern on the growth side and corporate earnings side. So we would look at the budget for giving some kind of a fiscal stimulus to the economy in terms of heightened expenditure on the infrastructure side and giving some relief on the consumption side by announcing some tax cuts for the consuming classes, as well as giving a safety net on the subsidy side to the more challenged part of the population who are finding it difficult to make ends meet. So it will be a trade-off budget. The government will have to do a very fine balancing act in this budget.
Mr. Bagga, as far as investor confidence in India's growth story is concerned, it seems a bit compromised in the recent months. Is there anything that you foresee in this budget or would expect from this budget to boost investor confidence?
Yeah, that is very true. Especially the foreign investors have been taking out money from India. Of course, it's a small portion. They have more than $900 billion invested into the Indian markets, and out of that, about $20 billion has gone out. So a small portion only has gone out. But overall, global sentiment is fragile and money is really seeking more safe havens. So last year, in dollar terms, the Indian markets gave about 5.6% return. And a US money market fund, what we call a liquid fund in India, would have been yielding about 4.5 to 4.75% return. So for FIs to take the risk of India, we need to be delivering 10% returns in dollar terms to make it healthy for new investors to come in. So sentiment is needing a boost, and a lot of it is also more psychological. So if the government could come out and reassure the markets, that helps a lot, and then follow it up with action which is more market friendly. What we have seen is that taxes have kept going up, and especially the capital gains tax, which is a big issue for the foreign investors because they are facing that tax. So some relief there. When Mr. Chidambaram had brought in that tax,
Yes.
the securities transaction tax, it was assured that because we are levying this tax at source, the capital gains will not be levied on equity investments. That went off.
Yes.
And now slowly that is being raised as well, which is hurting investor sentiment.
And Mr. Bagga, as far as household spending is concerned, do you feel the budget can address those issues or can boost household spending, and any other specific industries that you foresee which would require a bigger boost this time?
See, we are on the cusp of becoming a manufacturing hub for the world. There is a big opportunity in China +1. So manufacturing has to be continued to be given PLI kind of schemes, which helps our manufacturers to find a toehold. China is just too big for us to compete against, but we will have to give a better environment. Second is the ease of doing business has really deteriorated with a very rampant corruption at the very junior levels, at the district and the city levels. It's very difficult for any entrepreneur to set up industries, to run industries. There is rampant corruption. So something on that front. And third, for households, it's very critical that we give a tax cut. We need more jobs, we need employment, we need higher wages. That comes as a derivative of good fiscal policies. But right now, what can be done, at least the people who are earning, if they can be given a tax cut, so there is more money in their pocket, they can consume, and we can start a virtuous circle in the economy.
Thank you so much for sharing all your insights, sir. That was Ajay Bagga joining me from Mumbai.
Thank you.